previously I was trying to like save my way to becoming a millionaire and like really playing defense, I would call it, and like preventing dollars from leaving. And what I started to realize was you have a bigger opportunity playing offense than you do defense, because at the end of the day, like you're going to have to pay a living expense, whether that be rent or your mortgage. You have to pay for food, you have to pay for the basic expenses, and there's only like so far you can go in terms of reducing those expenses, but there's no limit to how much offense you can play and maximizing your earnings potential. So I just started to realize that there was much more to gain in focusing on improving my earnings potential than there was in like pinching pennies. But at the end of the day, like I'm still, you know, very old school Midwestern in terms of not buying flashy things.
Welcome, millionaires and future millionaires. You're listening to the Millionaires Unveiled podcast, the show where you'll hear the stories and interviews of everyday millionaires. We'll unveil their decisions, their strategies, and their portfolio allocation. Now to your host, Jace Mattinson.
Welcome back to another episode of the Millionaires Unveiled podcast. This is episode number 368.
This is the podcast where everyday millionaires spill the beans on their stacks of green. We are your hosts, Jason Stacy, ready to bring you the unscripted tales of wealth, warts and all, because who needs a script when you're rolling in dough?
Join us as we dive into the net worths and asset allocations of regular folks turned financial titans. It's like Cribs, but with fewer gold-plated toilets and more practical advice.
We promise our only edits are to be kid-friendly, so you won't hear any naughty language, just lots of cha-ching and a sprinkle of do-re-mi. So buckle up, tighten those purse strings, and get ready to laugh and learn with Millionaires Unveiled.
So this week, I saw a few interesting things running around the internet, and one of them is about the mistakes that people make with their 401ks or just investments in general. And it caught my attention because this actually happened to me, I want to say probably like 4 years ago or 3 or 4 years ago, probably during the pandemic. And basically, it's all the money that people are losing. In fact, I think one of the articles was, I don't know, $182 billion lost. But sometimes you set up automatic investments, or you think you have automatic investments, and it goes into an account, sometimes an account that might be a money market or some sort of other cash type account. And you actually have to manually go in there and move it. In this particular case, I had set up a new account, and long story short, I didn't realize until a year later that the money that I had thought I had put into that account and investment was still sitting effectively in cash. And I lost out on a year of returns. And apparently, a lot of everyday Americans are also doing this to the tune of $182+ billion a year.
It's definitely an example of automation's gone wrong when you really aren't watching over your investments.
Yeah, maybe I need some AI to help me with all that, I don't know. Anyway, so go check that. Also, make sure you update your beneficiaries. And yeah, that's always something that slips through the cracks. It was also mentioned in several of these articles. Anyway, today's guest, Andrew's got a net worth of $1.1 million and spread quite a bit across various market investments. And he talks about how real estate is just not for him. So I know there's going to be a lot of y'all out there that are hardcore into the stock market and don't really do real estate or like real estate or business or any other types of ventures. And Andrew's going to be your guy. So without any further delay, let's get right into it with Andrew. Andy, do you want to just give us a little about your background and what you're up to now?
Yeah. First of all, just want to take a quick minute to thank you for running this show over the years. I've listened to probably 100+ episodes and have gotten a ton of value from this. And as I've been listening, I've kind of like daydreamed or visioned having the opportunity to be on the show, and really like all of the value that I've gotten from the guests have propelled me to have the opportunity to like be speaking to you guys. So it means a lot to be on here and have gotten so much out of the show. So I have kind of bounced all over the country. I grew up in the Midwest, lived on the West Coast for about 4 years, and then was in Denver for a couple, and now live over here on the East Coast. I've also changed industries a few different times, have found kind of success in tech over the last probably 6 years or so now. But I think really like what started me on this journey was seeing several of my peers who were taking personal finance very seriously, and seeing kind of the results that they were having. And it never really was like a huge part of my life until I sort of, you know, realized that in comparison to some of the people in my friend group, I was kind of starting to fall behind, and really took that upon myself to start tracking it. And I think the moment that I started tracking, and I reference my spreadsheet frequently, but it was January 2020. I made it a point to, every single month track my net worth. And I guess they say, what gets measured gets done. And that was like really a catalyst for me being here and having this opportunity to chat with you guys today.
Awesome. And I want to get into some of the things that you kind of alluded to. But before we do, what's your net worth today?
My net worth is 1.1 million. Just surpassed the $1 million mark earlier this year.
Nice. Congrats. A newly minted millionaire and got to do the $1 million holler. I love it.
Yes, absolutely.
So how is the 1.1, I should say, broken up?
Sure. So I've got just over 30,000 in the bank in cash. I have about $275,000 in home equity. I've got about $32,000 in a 401k across a couple different employers. I have about $80,000 in equity for the company that I'm currently employed with, and then about $650,000 in a taxable brokerage account. I'm missing a couple like smaller miscellaneous categories, but that the bulk of it there would be, between the home equity and my brokerage account.
Nice. And how long have you been building that brokerage account?
Since 2017.
Okay, so you've been on kind of a clip, almost 100 grand a year.
Yeah.
Call it. How much have you put in there versus the growth? Do you know?
Yeah. I'll tell you right now. I have put in the vast majority of it has been income that I've earned throughout my career, and then the growth would equate to about 125,000. So I think all time I'm at 24% growth rate right now.
Okay. So pretty substantial. I mean, you've been at this and plowing a lot of money into there. Had a little bit of growth, but really the compounded interest that will propel that even larger. You're still waiting for some of that to come.
Yeah, I think so. And as it relates to the portfolio, like I've been following, the very fundamentals. It's all been dollar cost averaging, index funds, S&P, tracked index funds throughout the duration of this. And so it's just been, literally I, have my reminder the 15th of every single month. I'm taking all, the excess funds that I have from my checking account. I have a certain threshold. Everything above and beyond that immediately gets invested into the stock market. Don't even think about it. And I just have that as my strategy.
One more question on that. How do you handle your kind of tax situation with that taxable brokerage? I mean, at that size, you're probably getting some pretty hefty tax bills at this point. Are you holding back cash? Do you end up withdrawing a little bit out of there? Or walk us through that a little bit.
Yeah, so everything that I'm investing is I have a very long-term time horizon for it. So I'm really not selling anything. The only tax liability as a result of that would be dividends, which thus far have been, negligible in the grand scheme of things. So that hasn't been a big concern yet. I know that will come down the line, but I very much follow like a long-term approach.
Okay. And walk us through just a little bit on the retirement side. Huge brokerage. Did you focus on the brokerage more than the retirement first, or kind of how did that, I guess, balance or imbalance, work in your mind?
Yeah, the 401k, like I began investing in that immediately as soon as I hit my 1 year mark, which was the requirement for my employer at the time. And then I contributed up to the employer match, of course. I had for a little while dabbled into investing separately into a Roth IRA. My income exceeded the what's allowed for contributing to a Roth, and so pivoted back into all of that going into a taxable brokerage at that stage.
And then the home equity, has that been just from appreciation, or you've been aggressively paying that down as well?
Yeah, have not been aggressive on paying down the mortgage. Fortunately, we bought in 2021, and I think we got a 3.12 30-year fixed rate, which we were just incredibly fortunate to be able to get historically low interest rates and lock that in. So as I thought through it, I just decided that it made more sense for us to continue investing, given that we have a long-term time horizon. I'm 33 years old, and feeling like the gains that we could get in the stock market would outweigh the benefit of paying off the mortgage early. Has kind of been the strategy.
Gotcha. And do you plan to keep that kind of going forward?
Yeah, I think so. I don't foresee that changing. Also, like we're in an area here where property values have been appreciating substantially, and we've obviously benefited from that. So no, I don't foresee a change to that strategy.
Hey, this is Jace, your host, coming to you in the middle of the podcast. Don't worry, this isn't an ad. Just wanted to see if there's any other multimillionaires or soon to be millionaires that want to be on the show. If so, send us an email, millionaires@gmail.com. We've got some slots opening up for the fall. Would love to have you. Always looking for new great guests. And we've got to get a couple like journalists on the show, or maybe even a professional athlete or former professional athlete. Those are some requests that we've had, and we haven't even hit on those professions. So once again, send us an email, millionairesunveiled@gmail.com. Now back to the show.
So when a dollar comes in, how does Andrew allocate? Where does it go first?
Sure. So, I kind of alluded to this earlier. I had, I know that there's lots of different schools of thought for, how much you would want to keep in an emergency fund. I think, in 6 months plus, living expenses is common. I've determined like somewhere in like the 4 to 5 month range is what I'm comfortable with, especially knowing that like, in a nightmare scenario, like I'd have the brokerage account to fall back on. So basically that number that I've determined at 4 months living expenses, when I hit my, monthly kind of reminder, in any excess funds that are above and beyond that emergency fund immediately get invested into I do VOO is the ticker symbol. So the S&P 500 index for Vanguard gets invested in that, and I'm just dollar cost averaging every month. So I know I'm following very foundational personal finance kind of fundamentals, nothing too crazy or exciting, especially in comparison to some of the guests that you've had. But I guess in some ways I'm a testament to the that old school approach still works. And it's very passive in the sense that now that I've got this strategy that works for me, it's kind of a set it and forget it at this point.
Do you have like a target net worth that you want to get to?
Yeah, I think, I've seen now that like somewhere in the range of 2.2 million, I think is the average for achieving financial independence to the point that most would be able to, retire and live off gains for the rest of their life. I think I'm really like I'm in a spot where I'm really enjoying my career. For a long time I thought like financial freedom and retiring early, the whole like fire movement was the goal. But I think now it's just, getting to a point where our family is like very set, and we can enjoy already starting to enjoy things that I didn't anticipate experiencing in my life, and traveling to various parts of the world that I never thought I'd see. So I you know the big one was the $1 million mark. I wanted to make sure I got there by 35. Like that was a huge goal. Fortunate to have gotten there 2 years early. And now I don't necessarily have like a number or time horizon. I guess I need to figure that out.
Now you're a fish out of water. You achieved the the original goal and you hit the mark early. So
Yeah.
now what do I do? How would you say your lifestyle has changed since hitting the $1 million mark? Or has
Yeah.
it?
I've always been incredibly frugal. Like I was talking with a group of friends yesterday and I was saying like I'm the person that I drive across town to a different grocery store if I thought it meant that it could save me 79 cents. Like I was always buying the generic things, to pinch pennies and all of that. I still like, I don't think I'll ever fully get that out of my system. I've definitely like loosened the reins to the extent that if I spend a little bit more than what I had anticipated, it doesn't like eat at me like it used to, I guess. But I think one thing that really changed things philosophically for me was previously I was trying to like save my way to becoming a millionaire and like really playing defense, I would call it, and like preventing dollars from leaving. And what I started to realize was you have a bigger opportunity playing offense than you do defense, because at the end of the day, like you're going to have to pay a living expense, whether that be rent or your mortgage. You have to pay for food, you have to pay for the basic expenses, and there's only like so far you can go in terms of reducing those expenses, but there's no limit to how much offense you can play and maximizing your earnings potential. So I just started to realize that there was much more to gain in focusing on, improving my earnings potential than there was in like pinching pennies. But at the end of the day, like I'm still, you know, very old school Midwestern in terms of not buying flashy things.
Hey, and that's all right. It's done you well so far. So I'm no athletics expert here, but do you have some offensive plays in your back pocket that you're wanting to move forward with in the future?
Yeah, it's a good question. I've dabbled around a little bit with looking into franchise opportunities. Like I was looking into franchising a landscaping business here in my area, and I've taken a look at a couple other things. But I think for the time being, like in terms of my job, I'd be better suited towards like up leveling my skills in my career and job, as opposed to taking on a side hustle. Just kind of where I'm at.
Okay, so not necessarily looking at passive income, but just on how you can grow your current career trajectory.
Yeah, and I think I should add I'm in sales, and sales is unique in the sense that a huge portion of your income is variable. And so you have a obviously a large financial incentive to improve your ability as a salesperson and work hard. Whether you're like managing a team, which I am now, or you're an individual contributor. So I think like it's a career that allows you to have a W-2 job while also still having that entrepreneurial spirit to increase your income as you get better.
I'd love to back up just a little bit. When you first kind of started on this wealth building journey, you noticed you were kind of falling behind some of your peers, you felt like. What was the first step that you took when you recognized this, the difference between where you and some of your friends were financially?
Learning everything that I could possibly learn. I probably averaged 2 books a month on personal finance after that period. I also like Warren Buffett is one of my heroes. So I've probably listened to just about every interview that he's ever given that you could find on YouTube, and have soaked up just a ton of information from him. I had a chance to drive out to Omaha and see him speak in the annual shareholders meeting for Berkshire Hathaway. And so like I owe a huge debt of gratitude to all of the wisdom that he's imparted, and then also just like listening to podcasts like this one. This podcast is unique in the sense that you get really transparent looks at people from all types of industries and backgrounds, and how they've achieved success. So like I'd be remiss if I didn't also add this podcast to that list of resources that have kind of got me here.
Thank you. We didn't get a chance to say thanks for all your kind words earlier, but big thanks. And by me, I mean mostly Jace, because I haven't been around nearly as long as he has here. Well, thanks for sharing that. And how did you notice that there was a difference between you and some of your friends? Did you guys have a conversation about net worth, or did you just kind of notice lifestyle wise that like, hey, they're pretty spendy and seem to be pretty comfortable with that?
Yeah, I think it was more so like conversations around what's going on in the market and how interest rates are going. And I just realized like I couldn't participate in these conversations because I just didn't have the knowledge. Like it just wasn't a huge goal of mine at that time. And I wanted to learn.
Well, hey, that's the first step. One, recognizing it, and then second, taking the steps to learn. So, what kind of role has your wife played in your financial journey?
Yeah, fortunately, like she and I are very aligned on our finances. Before even meeting me, she was also like a big saver, very frugal in how she operated. So it was a good match from that standpoint. And then, she has a ton of interests. Like investing isn't really one, to be frank. However, she very much trusted me early on, even before we were married, and us starting to combine our finances before even officially being married, which I know is a little non-traditional, but that I think like really helped develop trust. And she is incredibly supportive in this, but kind of allows me to take the lead from that standpoint.
Sounds like you two have a good team working relationship going on then.
Yes. Yes, very fortunate.
So, Andrew, as you've gone on this journey the last few years, I mean, you've seen the hockey stick growth, and you've alluded to some of this being involved in some of these peer groups. Are there any resources, outside of some of the podcasts and things that you've mentioned already that have been pretty critical to your success in such a short amount of time?
Yeah, let me think about that for a minute outside of what I mentioned. No, honestly, I think like some of those books and the podcasts would be the big thing. I will just add, you mentioned the hockey stick growth piece. It really has been, and like the compounding effect is really empowering to see. I think I'm the type of person that you make these improvements and maybe you get 1% better every day at something, but like the following day, you don't really notice that 1% gain because it's such a small marginal increase. But if you have the ability to track it and chart it over time, I found that to be huge, as a motivator, because it allows you to see like the little growth and then starting to see that start to pick up. So just for context, I mentioned I started tracking this January of 2020. My net worth at that time was 192,000. So in the matter of 4 years, it's 5x'd, and you really start to see that swing upward quickly as get into, past the 500,000 mark and beyond from kind of what I found.
Yeah, appreciate you sharing that. Talk to us a little bit about kind of the career journey that you've had and navigating all the different moves and industries and what that's led you to today.
Sure. So my entire career has been in sales. I started selling, very small ticket items. In fact, I actually started in ticket sales for a sports franchise, and yeah, had the opportunity to kind of work my way up. That's an industry that you have a lot of really awesome experiences. Obviously, attending the events and meeting lots of like you know both the athletes but high powered executives within those companies. Unfortunately, not an industry that pays very well. And I think as I started to make personal finance a bigger priority for me, I started to realize that while I have an incredible amount of passion for that world, the ability to pursue financial freedom started to kind of outweigh the passion a little bit. And so I had kind of moved on to tech. I had a few folks that I'd worked with previously that had already made that move and had really good feedback to share with me about their experience. And that is something that really changed things. I was able to join a company pre-IPO as well. I know obviously that can be very hit or miss, but I joined a company at a time where we were experiencing explosive growth, and that really accelerated my income, but also gave me the opportunity to earn some equity in the company that post IPO obviously had some value to it.
Any advice for anybody who's trying to kind of navigate that same journey of going from one company, making the moves, and kind of I mean, did you have any resources or friends or mentors that helped you along that journey?
Yeah, I was fortunate in this case to have multiple like internal folks at the company who were able to like give me the lay of the land as I was going through the interview process, which helps a ton. I know it's very cliche to say your network is your net worth, but the person who really kind of like pounded the table for me and opened that door to give me a shot was someone who literally was in my first ever sales training class fresh out of college when we were like making minimum wage, making dialing 200 plus numbers per day, and gave me an opportunity and said, hey, I know that you're extremely passionate about the sports world. Come give this a shot. And that, really has changed our lives. So I think just, yeah, whether it's an industry you think you would ever like see yourself in or not, just maintaining relationships, keeping contacts with folks is massive.
Yeah, appreciate you sharing that. What kind of role has your spouse played in these kinds of things as, career navigation, changing, all the different things that you've changed and getting more focused on personal finance? I mean, give us a little insight into some of those conversations that have taken place over the years.
Yeah, I think for one, she has definitely empowered me to feel confident in leading. I think, initially I began, giving her an in-depth monthly update on where we're at across all of these different categories and showing charts. And I think after a while, she was like, you know what? Like all of this intel is great, but at the end of the day, I trust you. So that's been great. I think she is, yeah, she's just incredibly supportive in all of this. I think, yeah, Yeah.
Have you ever had any disagreements about kind of the trajectory to go?
Yeah, it's a good question. I think we did have one as it relates to the purchase of a car. So we both, I drive a 2011 Camaro. She drives a 2005 Prius. So our cars are older. I think if it were up to her, she would probably buy the new car immediately, but has been more patient because I've tried to talk to her about the opportunity cost of like, hey, this is not just $30,000 now, but if we take a look at the math of the compound interest over the years, like it turns out like this $30,000 we're spending today would be, $500,000 when we're retirement age and into our mid 60s if we were to leave it in the index. So just like thinking about it from that perspective. But we've come to an agreement on what the timeline looks like on the purchase of that new car. I think that's probably like the only big disagreement that we've had. I think generally speaking, like I'm just fortunate in the sense that like this is an area where she and I like get along very well.
That's awesome. Appreciate you sharing that, and can't wait for the timing of the car. Well, let's wrap up with some rapid fire questions. What's the most expensive pair of shoes or pants that you purchased?
Most expensive pair of shoes. I'm a marathon runner. I actually just ran a marathon a month ago. I think it will probably be my last, but I bought $140 pair of running shoes in preparation for that. That's by far the most I've ever spent on a pair of shoes. Pants, like a $40 pair of jeans, is probably the most I've ever spent.
Okay, what kind of shoes? We've had a lot of runners lately, so what's the shoe of choice?
This was a Nike Pegasus.
Okay, I've heard that one a few times too. Awesome. What about the most expensive meal out?
Most expensive meal out, I think honestly, the one that comes to mind is my wife and I celebrating this milestone of becoming millionaires. I think we went out for dinner and we spent $180, which for us is a lot.
And did you go to like a steakhouse or sushi, or what got you to 180?
Yeah, it was like a classic Southern style, artisan type restaurant.
Okay, nice. What about the most expensive experience or vacation?
We are, for our honeymoon, we went to Hawaii and we combined that with a trip to see one of my wife's friends was getting married there, and so our honeymoon was in combination with attending that wedding. But we were in Maui for like a week.
Okay, do you remember what that ran you?
Phew, $2,500.
Okay, that's not bad for Maui.
No.
What about the most, or I guess the bucket list experience that you're looking forward to the most that you haven't had yet?
Ooh, coming up for work, I'll be traveling to India in a month, and I'm incredibly excited to see that country and experience that. I think outside of that, I've also very much wanted to travel to Egypt and see the pyramids. I have this whole vision of like, riding on a camel through the desert, coming upon the pyramids and experiencing all of that. So I think that's at the top of the list.
Okay, that's awesome. Uh, what's the dumbest thing you've ever wasted money on?
Gosh, that's a tough one. I don't know. I'm gonna go with an Xbox that cost me $300, but it wasn't the cost. It was, going back to what I said earlier with the opportunity cost thing. If you think about what more valuable activities I could have done with all of the time spent playing, the the Xbox is probably where the cost really gets you.
Okay, what's something that you've spent way too much money on but you don't regret it?
I think any trip, any experience with loved ones, for my entire life, I've lived away from home, so it's been a lot of travels back and forth for Christmas and for various holidays, and that obviously can add up, but obviously I wouldn't trade any of those trips for anything.
Okay, what's the craziest thing that you've ever done to earn money?
Mm. I don't know so much if this is crazy. The one that like I definitely enjoyed the least was growing up. For a very long time, I was a soccer referee, and so I was spending out, I was pretty much sacrificing my weekends for $15 per soccer game for, 8 to 12-year-olds, and getting heckled and yelled at by parents who may or may not have fully understood the rules. So that was a tough way to earn money as my first job, but definitely gave me thicker skin.
Okay. When do you think you'll know you're ready for retirement?
That's a really good question. I don't know that I have like a slam dunk answer for that. I think when I can do the math and feel confident that my like withdrawal rate from my investments is sustainable, is like the quantitative answer to that. I've sort of like started to project or forecast into the future, and have started to realize that, if we maintain at a similar level of income and, continue to get just average stock market returns, we'd have the opportunity to retire in our mid 40s, which I never anticipated that being a thing until recently. I don't think that we would retire at that point, because I think both of us are very much like busybodies, and like we like to be contributing to society, I guess. But I think I th- we'll be in a spot more than likely where we can retire before we'll want to, if that makes sense.
Okay. What's a closely held belief that you once had that you recently changed your mind on?
Hmm. I should have anticipated this question for how many of your episodes I've listened to. Yeah, okay. Here's what I'm going to go with. I think listening to like a lot of episodes of this show, and just you hear the statistics about the number of millionaires in America who are savvy real estate investors. For a long time, I felt like the only path to where I wanted to go was to be highly involved in real estate. And I have a tremendous amount of respect for all of the real estate investors, whether it be multifamily or they're doing Airbnb, renting out, whatever the case may be. I just started to realize over time that my passion lied in stock investments. And that was the path that I wanted to pursue. I knew that, maybe you could have, sharper net worth increases with getting involved in real estate. But again, that's just not really where my passions lied. And I think, you know, I started to realize as the net worth started to improve, and things started to progress in my direction, that there was a path toward me getting to these goals, where really my primary residence is the only involvement I have in real estate. And I can continue to focus on kind of the area that I'm a little bit more passionate about, which is stock and business investments.
Okay. What's a key lesson you learned from childhood?
Yeah, so in my family, my parents got divorced when I was 12, and I eh, when that happened, you know, my household was obviously like very divided for a period of time, and it kind of like gave me a chip on my shoulder of feeling like a lot of my friends had, this cohesive, loving family unit, and mine was a little bit different than others. And so I think over time, like that made me a little resentful for a while. But then as I got older, I started to realize like I could use that chip on my shoulder in my favor. And so I think that's something from childhood that like has really helped propel me, is feeling as though, I could kind of harness some of the like troubling times that I had in my past toward, working toward goals, if that makes any sense.
Yeah, for sure. Any last piece of advice for somebody who's just starting out on their journey?
I think first and foremost, like I'll repeat some of the themes that I said earlier, but there's so much information that's available for free, whether it be from your library, from, podcasts, from YouTube interviews. Like, find some of these people that you resonate with. For me, it was, the Dave Ramseys, or, I mentioned listening to Warren Buffett over the years, like, and really, soak up all of the information that you can. And then as soon as possible, start tracking where you're at, and track consistently over time. Because otherwise you very likely will get discouraged if you're not seeing month over month improvements. And so I know for me that all was huge.
Awesome. That's Andrew with a net worth of $1.1 million. Thanks for on the show today.
Thank you so much. It was great to chat with you guys.
Thanks for listening to the Millionaires Unveiled podcast with Jace Mattinson. For more stories, investment opportunities, and information, check out our website, millionairesunveiled.com. See you next time when you'll hear from another everyday millionaire.